Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, March 27th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. You'll notice right here the previous several days here in the ES have been super low range days. We were looking for just a modest low range outside day the previous session. We actually got it to the downside. A little bit of range here, but you can see how small the ranges have been compared to the 10-day average and how fast the 5-period average has dropped. That tells you volatility has dropped tremendously. Very similar to how price played out back here in mid to late February here, where you had this move up and then you had this period of very, very quiet price action. Overall, the market's still trending up, but the volatility has clearly dropped here, especially as we head into the final couple of days of the holiday shortened week. What we're looking for here for the most part is just a melt up that can take us higher into the weekend. Any pullback, even if it's as deep as the 5250 level, could still be bought for this thing to continue higher. Today on an intraday basis, bulls defending intraday VWAP with higher highs right now and higher lows as this thing trends higher. We could be looking at a push into 5300 up ahead, but the intraday range likely to be quite narrow here, as has been the case over the last 4 sessions. We could continue to see that type of low volatility trading, so look to avoid the chop here and look to play with a directional bias here, currently to the upside toward 5300. Taking a look at the NQ, similar price action here. Not a whole lot of range. This market trading somewhere between 150 and 200 points of range here lately. Actually hasn't even gotten 200 points of range on a day-to-day basis over the last 4 sessions. You can see right now here fairly narrow price action here over the last 4 days, and now developing 5 days. Again, very similar to what we've seen before, but for the most part this market just continues to trend up. Any pullback could still be a buying opportunity, and here today we could be looking at further strength through the previous session's midpoint toward 18.6. That's not too far off from where we currently are, but again, this market not really seeing much in the way of increased volatility at this time. Now, should we see some sort of big failure through 18.4, that could open up a little bit more weakness here. A retest of the FOMC key level below, for example, could be in play. But even then, this market has been able to withstand those pullbacks and then look for new highs up ahead. As a matter of fact, the 21-period average has been heavily bid here during this uptrending market, and the bullish Pima trigger zone remains intact. So right now, still showing strength overall, and we could be looking at a move that can take us toward 18.6 and perhaps even as high as the previous session's highs, 18.619. Looking at crude oil, this one's down about 2/3% right now. It has been stuck within a 2-week trading range here after the breakout through the $80 level. So here's 80 bucks right here. This thing broke through, and ever since it reached that high of 83.12, it's been mostly range bound. Stuck in the range right here overall. Now, we are seeing a little bit of a strong low develop this morning, a modestly strong low with a decent rally and turnaround, but this could just kind of set the boundaries for the day's range. The 80.55 low and the 81.20, 81.30 high could be kind of the day's range at the moment, and we could be looking at sideways range-bound action within that range, especially with crude oil inventories coming up here in about 90 minutes. That could provide a little bit of volatility. Overall, this market's still kind of quietly trending up, but really hasn't had the juice to really push higher and break higher. It's been able to kind of go higher, sideways, go higher, sideways, but it is still holding above 80. You know, a failure at 80 could open up a wider pullback, but it has been able to stay above that level for now. At some point here, this narrow range could lead to the next move, breakout and expansion style move. But again, this market has been hesitant to really get going in meaningful fashion. So again, we could be mostly range bound here today, within the range, with crude oil inventories coming up to provide perhaps a little bit of volatility later this morning. Looking at gold futures, this one developed a secondary strong high in the previous session here, rollover gap up, and pulled back off those highs. Here today we're seeing another strong move up within that range, which is giving us kind of a back-to-back tail events here at the moment. The 2190, 2195 zone has been very, very strong support short term. That's going to be the level to watch in case this thing drops further. But for the most part, this market shaking off big time rejection, shaking off weakness, and is spending quite a bit more time above 2200 now, especially after the day one rejection high here. A big part of the thesis here was that we are now in a bearish trade sequence here to the downside as long as price stays below 2200. Any pullback to that zone should be defended, and instead the previous session here we had that gap up and we traded quite a bit above 2200, even closing above that level. And then here today so far we have seen a ton of trading above 2200. That could provide quite a bit of acceptance, and especially with this upward trending Pima trigger zone, it could actually lead to further strength ahead. So again, this market bears need below 2195 to really open up a fill of the gap and maybe a return to 2150. But this so far, bulls have been able to withstand any negative rejections here and continue to hold prices above 2200. So continue to watch this previous session's midpoint through that level. Could still open up new highs for the day. Lastly, looking at the YM here. The YM has seen a couple of days of super compression down here, especially after increased volatility. That volatility here was outpacing the ES and the NQ for the most part. But the last couple of days, super narrow range. We now have 3 days of narrow range price action, a modest little rounded bottom on the intraday charts here, and we're now testing the top end of the range. This thing can push through the top end of the range. We could be looking at a move that can take us into about 250 points for the day, maybe a little bit higher, but so far testing that top end and not really seeing a strong break through that level just yet. 39,900 would be the level to kind of really push through. Can it get through that zone? If not, we could be looking at a rotation right back inside the range. So a developing 3-day narrow range, which is building some energy here with a bullish directional bias overall. We do have ourselves a new key range here that could be in play. That key range right there had already tested the 50% extension, the 100% extension a bit above here at 40,900. So that could be the ultimate upside target here up ahead in the near term. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.